Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very good day. And in today's markets, guys, well, the bounce continues and in a very nice fashion. As a matter of fact, guys, we have now erased all of the losses of the entire week since your infamous Black Monday start. So take a look at this, guys, in terms of SPY on the weekly, erasing all of the losses over the course of the week and ending at last Friday's levels. And it was pretty much the same thing on the QQQs, erasing all of the week's losses and pretty much ending at the last Friday close session. So, is the pain over in the markets right now? Well, guys, it's going to be very tough to say, right? Because the pain is data dependent right now. We are facing somewhat of a recession narrative, and it's coming from a lot of different areas. Number one, we have a lot of corporate earnings that point to the consumer slowing down. Number two, we also have some negative data coming out in terms of jobs, and that was voiced by the non-farm payrolls just a few short weeks ago. So we have a lot of conflicting data right now. The GDP numbers say the economy is good, but companies' earnings say that the consumer is slowing down. The jobs market data is still relatively positive, but is starting to have a little bit of cracks right now. So all in all, guys, it is going to be a very volatile next at least 1 to 2 months, in my opinion, leading into the recession, leading into the election. So in terms of the recession narrative, guys, we don't yet have any conclusive evidence. We have very conflicting data right now, and any negative data will obviously lead to further sell-offs in the market. And any positive data may just be said to be an outlier for that specific period, right? Which is why we need consecutive months and months of good data to remove the recession narrative from a lot of people's heads right now, especially the media, because analysts right now, a lot of analysts and all of your major banks are saying that the recession scenario is still not yet fully ingrained in the economy. So a lot of conflicting data, but you guys know me, we will take this one day at a time, 1 week at a time, and we will adjust our trading and investing strategies accordingly. So in today's video, guys, I have a very nice video prepared for you guys. Number one, we're going to go through our major technical analysis rundown of all our major indexes, see how we stand after this week's recovery, then take a look at our major big tech names and see whether or not there are still some decent buy the dip opportunities. And lastly, at the end of the video, guys, I'm going to be taking you through a ton of different tickers. We're going to do 2 parts. Number one is going to be more options and short-term trade oriented. All of the names that I look through on a weekly basis to potentially write short puts on, write put credit spreads, buy calls, or buy call debit spreads. All of those good things. That'll be part number one. We're going to spend a little bit, probably about 10 minutes on that. And part number 2 of the investing section will be, how do I find long-term, extremely consistent and profitable companies to invest in? I'm going to take you guys through a majority of the list that I have prepared and tell you guys why they are all extremely high quality names and what sets them apart from the rest and how can they keep growing year after year after year and beat the S&P 500. So very nice video that I have prepared for you guys. Let's jump right into it right now. SPY up about 0.44% on the day, QQQ wrapping up 0.52%, and all in all, guys, it was a steady day of recovery. Take a look at the heat map right here. You will see that most sectors were ending in the green, especially our major big tech names. Semiconductors were mixed. Financials not performing too bad. Healthcare had a decent day off of continued gains from Eli Lilly. And the bottom half of the market, guys, very mixed, but as a whole, relatively solid. Take a look at your one-day performance. You'll see that even better. Everything pretty much in the green. And now, finally, on a 1 week relative performance, guys, we have a mixed market. Up until yesterday, we were pretty much negative for almost everything here, but now you can see it's really mixed down the middle, guys. So the market is largely starting to come back, but when we look on the 1 month relative, you can see there is still a lot of damage that's been done, especially in technology and consumer cyclical. Consumer cyclical is consumer discretionary, right? All those consumer facing brands that have products that consumers can potentially pivot away from when times get a little bit tight in terms of monthly budgets. So before we get into more technical analysis, guys, let's jump into our, or as a matter of fact, my bad, guys, we don't have any earnings today. So used to it so far. So let's jump right into our technical analysis of our indexes, shall we? So moving into SPY. So in terms of the technicals, guys, the technicals really haven't changed much over the past week, right? We knew what we were getting into at the start of the week and nothing much has changed. So let's go over a few of the trends and see what we were looking for. Obviously, the SPY was in a significant daily downtrend as of this moment right here, and we were looking for the size of the bounce to determine whether or not the bulls have a chance at maybe resetting into a daily uptrend. Well, the size of the bounce now, guys, is getting quite adequate. Over 50% bounce on the SPY. So if we do have a little bit of continuation into the Monday session, I would like to see the bulls get at least as high as this yellow line right here. Previous support for the markets, which is now going to be resistance, and it is literally right in line with the 618 on the fibs. So that could be a likely area where the potential rally gets stopped out, and then it will be up to the bulls to prove to us, can they set the daily higher low and reverse this into a new daily uptrend and start taking more and more back of this weekly damage that was done? Because obviously now we are in a little bit of a weekly fall off, right? We were in a weekly uptrend, we lost the weekly uptrend, but now it's up to the bulls, guys, to put in a sizable bounce and get us back into that weekly uptrend over time. If not, the flip side scenario is obviously that weekly downtrend and coming down into lower and lower monthly levels, such as under 500, about that 497 to retain the last of the monthly support levels and the monthly 12 EMA. So all in all, it's really up to the bulls, guys, to get this daily uptrend back in motion. But as of now, they do have a fairly pretty bounce going for them. Should be a lot of volatility left in the markets over the next few weeks. So there's going to be many trading and investing opportunities that will still be opened up. Moving into the QQQ, so definitely don't feel any FOMO right now that you missed the bottom, guys. Still a lot of trading, a lot of action, and a lot of data that could potentially send us even lower, right? So keep that in mind. Moving on to the QQQ. So QQQs as well, same thing. After this daily flush, we were looking for the size of the bounce in hopes for the bulls to get a little bit of a daily uptrend back in motion. The size of the bounce right now is fairly decent. Take a look at this, over 50%. I would like to see them get up to the 618 line, which is literally previous support for the markets, that yellow line right there, which is going to be current resistance. So the bulls are trying to pull into this right now. If for which reason we get rejected early next week and have a little bit of a dip, it will be up to the bulls to set up for the daily higher low and get us into a daily uptrend and start reversing a lot of this weekly damage that's been done over the past 4 weeks. Similar to the SPY, the QQQs have also lost the weekly uptrend. So now it's up to them, guys, to put in a sizable bounce on the weekly time frame as well. For that, you need the continuation of this daily uptrend a little bit higher. Then we'll be able to gauge the size of the bounce on the weekly for a potential weekly trend recapture as well. So everything's looking better for the bulls, but definitely not out of the woods just yet. This is only step number 1. Step number 2 is getting that daily trend back. And step number 3 is putting in such a big move on the weekly that the probabilities do favor a recapture of that weekly uptrend, right? Because we know they've never lost the monthly uptrend so far, but the more they pull back, guys, the more that comes into jeopardy, right? So all in all, looking fairly decent. Myself personally, I will be waiting for a potential dip to average into some positions even more. I'm not going to chase the market here, especially not at some big resistance levels. Moving on to XLF financials right now. XLF also putting in a decent size bounce, looking fairly adequate, right? So XLF, I'm just going to remind you guys, it was one of the only major indexes that never lost the weekly uptrend, as you can see, right? The higher lows are still protected right now, and those are the ones that we really need to watch out for, guys, because they are pivotal for the bulls to maintain this structure. So moving on in, guys, in terms of the size of the daily bounce, you guys obviously know what happened, right? We were in a gorgeous daily uptrend, and unfortunately, we lost the higher lows right here. So now, daily consolidation obviously in their way. We watch the size of the bounce to determine whether or not the bulls are setting up maybe for a little bit of a rollover here, or whether or not the size of the bounce can warrant a little bit of a daily uptrend reversal. So as of now, the size of the bounce is decent, over 50%, but I'd like to see them get all the way up here at the 618, which is pretty much 42.82. Coincidentally, guys, that line is, for all intents and purposes, very close to our prior support levels for the markets, right? So in the event we do get rejected here at the early point of next week, it will be up to the bulls to confirm step number 2, which is the daily uptrend reversal. And then moving on in, guys, to just confirm the continuation of this weekly uptrend, since we never really lost it. So financials looking better than other sectors, that's for sure. My favorite plays, I'll bring them up every single video, guys, until you guys get sick of me saying them. Pretty much Visa and MasterCard still at relatively extremely juicy levels, in my opinion, especially Visa and MasterCard as well. MasterCard really at a very decent level of support right now too. Now moving on down to healthcare. Healthcare looking decently as well. So healthcare was in a daily downtrend, and the bulls put in an engulfing move over the last couple of days, really buoyed by Eli Lilly's earnings being one of the biggest weights in that index. So not too bad, daily engulfing move. Now it will be up to the bulls too once this move is topped out, looking to set the daily higher low and get the daily uptrend back. Obviously, we're going to be dealing with a lot of resistance up here, so it's definitely going to be up to the bulls here to either smash this and set above this resistance level right here, or if we get rejected, set up for the daily higher low and try and make a two-step attempt at smashing that. One thing's for sure, healthcare as well, never lost the weekly uptrend either, guys. So we're really just looking for some weekly uptrend continuation. Usually healthcare performs very, very well in the face of a recession narrative, so I would not be surprised if that does continue for them. Now, moving on to SMH. So SMH Semiconductors, I'm not too sure why. Let me just check my other charts. I'm not too sure why all of my support and resistance areas have been erased. That would be quite a shame if that's the case. Let me take a look here. As a matter of fact, they actually have. I'm going to have to look at why exactly that happened. But anyways, let's jump into SMH. So SMH, I'll just do them all over again. Why not? So SMH was really battling here with the lower bound of what we're working with. We're working with right here, right? So looking at that last level of support on the weekly, it was crucial for the bulls to protect it, because if we would have lost that area, it would have also been synonymous with losing the monthly uptrend as well. That would have not been good, guys, because then it takes so long to potentially get this one back. So nice to see the bulls play a little bit of defense where it counted the most. Now, keep an eye on this here, guys, right? It looks kind of like the SPY and the QQQs. So daily big move down, looking for the size of the bounce, and then it's up to the bulls to create enough space to set up for the daily trend change. Have they done it? Well, let's have a look. In terms of the size of the bounce, guys, very adequate, 50% bounce. I would like to see them come up a little bit more in relation to this most recent support level. Now going to be resistance, the 12 EMA, this yellow moving average right there is there too, and that is also the 618 fib. So a lot of confluence at that area, guys. I would not be surprised in the early part of next week if we get rejected from there. That is when we're going to be looking to set up for a daily higher low, set up the daily trend change, and start reversing a lot of this weekly damage, right? So the bulls not out of the woods yet, but nice to see them play defense where it matters the most. We will follow this one very, very closely, and there is a lot of decent semiconductor plays out there that I've brought up on the channel for the past foreseeable week or two, right? So Micron is one of them that is looking like a very, very decent level. I'm so disappointed that all my support and resistance levels got erased, but let's just do it again right here. Micron looking very, very decent down here in the lower 90s to all the way to $80 area for a nice little significant bounce, looking quite decent right there. In terms of another one, we're going to take a look at TSM. TSM as well, decent level, guys, bounced off of a perfect level of support back here, which was pretty much this level right here, right? We were looking for this one and it came into full effect. There was actually two levels we were looking at, blasted through the first one as if it wasn't even there, and now we reacted beautifully from that second one. So TSM not looking too bad at all. So what we're going to be looking for on TSM is maybe just a retest of this location right here in the event of an semiconductors pullback, right, to set up for those daily higher lows and maybe ramp up. Another company as well is ASML. ASML is one of my favorite plays out there because it is a pure monopoly, right? So ASML, where were we looking for? Well, the area that makes the most sense on the longer term timeframes, and this was pretty much the one we were looking at, guys. 820 all the way down to about 730. Beautiful area, in my humble opinion, to maybe be picking up some shares of such a gorgeous company. And those are just a few, guys. Obviously, there's a lot more, but that's just pretty much what I wanted to say for those few. Now, moving on to IWM Russell. IWM Russell, also struggling here, but trying its best to come back, actually ending red on the day. The Russell is definitely not going to have the greatest performance, guys, especially when we're faced with a recession narrative, right? So where were we looking for on the Russell? Where we were looking for was this area right here, guys. Take a look at this one. So you can see its previous support all the way back there. So previous support, resistance, almost coming to those areas, resistance and big resistance as well. And unfortunately, now we have closed below it. So it's going to be extremely tough for the bulls, in my opinion, to just V-shape this as if it never even happened. In terms of the size of the bounce from this big decline here, guys, well, the size of the bounce is less notable than other indexes, that's for sure, right? Now only roughly a 30% bounce. That is not good enough. So in the event that we roll over come early next week, we may just be looking for a scenario where we revisit some of these lows, guys, in the lower $200 range, which would be this area down here. Take a look at this one, right? So that would be your lower 196 all the way down to about 192. Could be a likely next area for the bulls to be testing. That is pretty much the rest of the peaks that were not included in this zone right here. That would be the likely stop for the bulls, in my opinion. Moving on to the Dow Jones. Dow Jones also not looking too bad. Keep an eye on this location right here. We pretty much tagged it over the course of the week. Glorious support for the bulls in this lower location. And now we are rejecting and coming back up for an expansion move. So looking at this, obviously it's clear as day. Loss of the daily uptrend. Now we need to look at the size of the bounce to get that daily uptrend back. So how are the bulls doing with that bounce? Well, only 38.2%, guys. Not high enough. We need to at least see a 50 or a 618 bounce on this. That would be 39,800 or 40,100 on the Dow Jones. If we can make it up into those regions, the bulls do have enough space to get a chance at recovering this into a daily uptrend and just pursuing the weekly uptrend, because similar to pretty much healthcare, the Dow Jones never really lost the weekly uptrend. We were always looking for a weekly higher low. Anything above 38,100 was looking for a weekly higher low for a continuation of the uptrend. So curious to see if the bulls can get that done over the next 2 weeks. Now, moving on down the list here, guys, let's jump into our big tech names right away. So moving on into Apple. Apple, 1.37% to the upside. Very healthy day for them, looking very good. They have really erased all of the drop, and you can really see that best on the weekly. Look at this beautiful move on the weekly by Apple, right? However, very tough for me to buy up here, as I've been saying over the last couple of weeks, pretty much. When we're at these elevated areas, this is obviously going to be an area of resistance. Let me just color that red right away. We're going to do this all live with you guys so you can see a bit how I place my resistance zones. So resistance right now, guys, size of the bounce for the bulls is very, very, very adequate right now. So keep in mind, we were in the context of a daily downtrend. Now we have a juicy bounce underway. Take a look at the size of this bounce. Apple putting in almost a 70% retracement of the sell-off. So Apple definitely has a great chance at setting up for a daily trend change as soon as this move is topped out. Just not going to be playing it, guys, because of how high the valuation is at these levels, right? A 3.08 peg, just a little bit too high for me, in my opinion. If we could come back eventually, right? And Apple, after such a beautiful recovery, I'd be hard pressed to see that the bulls maybe lose this area and come back down, but I can be hopeful if ever we come back and test this lower location right here, because we didn't really get much time at it, right? Few short seconds on the Monday morning session, and that was pretty much it. But if ever we revisit these locations, if the bulls can't hold it up and revisit the lower 200s, maybe to mid 190s, that is where I'd be having a more penchant to play Apple. Moving into AMD right now. So AMD also down about 1.5% on the day. Not the best day for them. And AMD is still struggling, guys, after this massive daily uptrend. Erased pretty much, all of the gains made by AMD virtually since the beginning of the year at this point, right? AMD is now negative year to date, and that has not been the case in a very long time, pretty much all year, right? That's why you look at the year to date. So moving on into the analysis, AMD trying its best to set up for the daily uptrend. That would be a break of Monday's high. If we can break Monday's high, we are looking for a daily uptrend, and that will mean that your weekly recovery is in progress right there. In terms of the daily, right? We're going to be looking for potential trend expansion all the way into these moving averages and hopefully all the way up into the 155. The 155 is a very pivotal moment in time for AMD, guys. It represents a lot of previous support for the markets back here, which will be resistance. So that's pretty much 150 up to 155. If we can get some weekly momentum into those levels, that could set up the bulls nicely to be able to recapture this at a later point in the year. However, AMD at these levels, I still really do like playing it, especially on the short put side. Anything pretty much under 125. 125 down to 115 is going to be my target for short puts over the foreseeable future. Is it a decent little nibble right now if you want to try to make an attempt at a swing trade for daily uptrend reversion? Absolutely, guys. You can't even keep some very tight stop losses, right? Stop losses would go pretty much below 128, which is about $4 worth of risk. And at that point, you're targeting the previous high of the move down, right? 153. So decent risk reward on that trade. Now, moving into Amazon. Amazon also up about 0.69% today. Very nice day for them. And so they're trying their best to start recovering a little bit of this weekly damage, but still a long way to go for Amazon bulls, right? After the earnings flush, we are now looking for the size of the move to determine whether or not the bulls can set up for the daily uptrend. Take a look at the size of the move. Back right now, not even 42%, 43%, right? So fairly weak bounce, all things considered, for Amazon. Now, I do agree that this decline was very, very, very savage, but need to see a little bit more from Amazon. If we can get up at least to the 50% mark, which would be about 170, 171, the bulls can have a trend change attempt under their belts. And then we will be looking, if they do get that trend change, guys, we'll start measuring against the weekly move to see, can they put in a sizable enough weekly bounce to get the weekly trend back as well. One thing's for sure, guys, Amazon, when it's down off the all-time highs, 16 all the way to 23%, such a decent point to be adding some shares. So even if we are here right now for a long-term portfolio, no red flags in adding some shares, in my humble opinion. But if you want to be the most patient bull, then you may just be waiting for a potential weekly revisit of these lower low areas around the mid 150s. This is where I'm going to be playing a lot of short puts, guys, in the foreseeable future. Anything under 160 to 150 is my desired range for playing short puts on this stock. Moving into Google right now, Google also with some decent recovery, about 1% to the upside. And Google, same concept, right? Daily downtrend for the longest time at this point, looking for the size of the bounce to see if the bulls can get a new daily uptrend going. So let's take a look at the size of the bounce right here, guys. Size of the bounce is barely 50%. So that is not good enough. What we need to see from Google next week is at least pull up to 50%, which is 166.5, and the 618 mark, which is about 168.5. If we can get into those ranges, the bulls will set up beautifully for a potential daily trend change attempt and start reversing a little bit of this weekly damage as well, right? Because Google too has unfortunately lost the weekly uptrend by losing these lows. So it's really paramount that we are able to put in a sizable bounce here, right? Get the daily uptrend back, and then eventually we measure the size of the weekly move and eventually get this weekly uptrend back as well. So Google at these lower levels, I really like picking up some shares of Google at these lower levels for a long-term portfolio. But if you want to be very patient, we maybe just be looking for that daily higher low, and then we can get a little bit better entries for it, guys, because then the stop losses can go below the lows, and then we're targeting the most recent range highs, right? So that could be a decent swing trade. In terms of short puts, I'll probably be writing short puts below Monday, which is pretty much below 157. So think 157 all the way down to about 152, as close as possible as I can get to the lower range of support, which is huge monthly support for the bulls down there. But Google, I still like these levels, and you can't go wrong with Google's off the all-time highs by about 15%, usually a decent trade opportunity. Moving into Meta right now. So Meta up about 1.6%, very decent day for them, all the way back up to 517. Meta has had a better recovery than most big tech stocks out there. They are now only 5% off the all-time highs because, in my humble opinion, guys, the company is so cheap at a 1.23 peg at $500. It is a no-brainer buy, and I think institutions largely recognize that by now. So moving into the technical analysis, daily uptrend is pretty much in motion right now. Very choppy price action, right? We're coming into a big area of resistance, 530 down to about 515. So if ever the bulls cannot get it done in this location, we'll just be looking for a daily lower, higher low, and then possibly a daily trend change attempt by the bulls. Looking very decent on the weekly as well, looking very, very good here, guys. After losing the weekly uptrend with this flush, the bulls are now fighting to create so much space off these lows that in the event we have more weekly drawdowns, they can possibly set up for the weekly higher low and get this weekly trend back. All in all, I love Meta here, guys, but it's now come away from our buying opportunity. Is it a decent value up here? Yes, but if you want to be extremely patient and we have some more market sell-off, we may be able to find Meta again in the 480 down to about 460 range. That will be best case scenario in terms of getting the best possible trade location for the best value. Moving into Meta right now, or also a possible trade setup for Meta right now as well, if Meta's bullishness just continues and the market keeps going up, break out of the all-time highs, retest of the all-time highs, and run. This retest location could be a very juicy trade. It did not pan out right here. They just flushed through, but on this second attempt, we can make an attempt at the breakout retest trade as well, right? Sometimes they work, but obviously we got hit pretty hard with an overall market sell-off. If it wasn't for an overall market sell-off, pretty sure that Meta would have been able to complete this. Moving into Microsoft. So Microsoft up 0.83% today, looking very good, guys. Microsoft is still one of the names that has not bounced that much and is one of my favorite names to buy right now. So Daily downtrend, clear as day. We're looking for the size of the bounce for the bulls to be able to set up for a daily trend change. Take a look at the size of the bounce in relation to the most recent leg of selling, which is pretty much this guy right here. So take a look. So in terms of that, guys, we do have right now a 50% bounce. I would need to see the bulls get at least as high as about the 413 level, which is the 618. That would be a nice enough size bounce to potentially warrant an attempt at a daily trend change, especially now that we're above the lower end of support down here, which is pretty much your 405 level roughly. So it's roughly 403 down to roughly 391. That is such a juicy location for some Microsoft shares. You've seen me publicly buy this one down here, and I will continue to add some shares on Microsoft down here the entire time that we are still in this area. Such a juicy trade for such a solid company, guys. Microsoft is arguably one of the most solid tech names in the game, over and above Apple by far, in my humble opinion. Just such a quality company. So buying shares down here, very good value proposition. And even for a little bit of a swing trade as well, would not be opposed to doing that too. Such a solid company. And on the weekly, it's going to take some time, but I do believe in Microsoft's ability to eventually start recapturing this weekly uptrend. It will take some time, but the momentum right now is starting to favor the bulls. So we're going to be continuing to look for that recovery. Very nice setup for Microsoft right now. Moving on into Netflix. So Netflix up 0.57%, and Netflix also one of the more stronger bounce names out there. So we had a big daily downtrend start on Netflix pretty much at the early point in July when the rest of the market started falling off. And now we've put in a 100% engulfing move from the most recent leg of selling. This is why I look at the size of the bounce here, guys, right? 80% bounce. So you know that the bulls are set up pretty well to get that daily trend change in motion. If we can get a little bit higher on the Monday session, we would now clear this big area that was resistance. We're now going to get above it, be able to use it as support as well as all your moving averages. We can get above that. Going to be looking very good for that daily trend change attempt. On the weekly, well, similar to a lot of big tech companies out there, loss of the weekly uptrend. So now that we're going to be looking for the daily uptrend shift, we're going to be looking for the weekly size of the bounce and potentially start recapturing these weekly uptrends as well on Netflix. So all in all, looking pretty good. But if the rest of the market falls off, guys, we'll take this one day at a time with the levels that we're given. My preferred levels for Netflix are down here, 573 down to about 550. So that's pretty much everything for your Netflix stock. Give me a quick second. Can I just erase this here? Let's just see. Yeah, let me just hide that real quick so we're not confused. Moving on down to NVIDIA. So NVIDIA down about 0.21% today, but they tried their best to recover here, guys, but just not getting the job done quite yet. So NVIDIA, as a matter of fact, they're trying, right? So daily downtrend was clear as day right there. And now we're trying to set up for the daily trend change, right? You can see it, right? Higher high, higher low, and trying for the higher high. So they're going to have to break, guys, the high of the Wednesday session, which is pretty much 109. If we can get above 109, daily uptrend is recaptured. And then we're going to be looking for the size of the weekly bounce, because obviously we know by now in a weekly downtrend on NVIDIA. That being said, the entire time that this bounce is underway here, guys, I will probably be looking to write some short puts anywhere below 100 down to about $90, as low as I can get. That is the area that I'm going to be looking for some short puts. All in all, though, looking very good. Just be mindful of this overhead resistance level, 119 down to about 115. If we pull up into there pretty hard, we may just get rejected and then try to make a second attempt at it. So those are your short-term price action levels as a whole. Nice to see NVIDIA, though, playing defense where it counted in the lower $90 range. Looking very good. And even on the monthly, still protecting that monthly uptrend, right? Not breaking to lower lows. So looking very good, guys. In terms of a buy the dip opportunity on NVIDIA, I still maintain 100 down to about $80. That's the area in which I'm going to start dollar cost averaging, little by little, right? All depends on the data that we receive from the markets and how deep this recession narrative starts cutting down into the whole technology and AI trade. Moving into Tesla right now, Tesla up about 0.58%. Decent day for Tesla, but nothing to scream home about. They've been pretty much range bound all week. So Tesla still in a daily downtrend right now, trying to set up for the daily trend change. We need a break of the Wednesday session, which is about 204. Break 204 to the upside, and you have a daily uptrend underway. And we're going to be looking to take back as much of this weekly move as possible. But with such a big move to the downside, guys, this is pretty much a 85-90% recapture by the bears. The momentum of this entire move up is completely lost at this point. In my opinion, the best we can get is maybe a tightening range within the $230 to roughly $200 level. That is your huge range of congestion, right, that we've been having over the past couple of years. So hopefully the bulls can maintain this range. Obviously, the worst case scenario is lower high on the weekly and then lower low, right? That's if really the recession narrative gets really badly ingrained. We get more data that points to a recession and the recession actually becomes real, then Tesla is not going to fare too well. Myself personally, guys, I have to only be trading Tesla in the 175 to 162 range. That is the only place that I would maybe contemplate writing some short puts or going for a little bit of a swing trade on the stock. Now, lastly, moving into Palantir. Palantir, so strong. 2.5% to the upside. And finally, we have done something very important today on Palantir, guys. We have now broken and closed above the massive area of resistance of 2020 and 2021. This was 2 years almost worth of resistance. We have now broken through it with a heck of a weekly move to the upside after earnings, looking extremely strong on Palantir right now. So you guys know, very aggressive daily move to the upside. The best case scenario for the bulls right now is putting in a little bit more space and then doing the infamous breakout, retest of the range, and run. If we can get that scenario underway, I may be tempted to make a little bit of a retest trade right here, right? $29, $28. I will try to be playing the retest on this for some potential expansion, right? So that could be a decent trade setup on the horizon, potentially for Palantir. Everything looking extremely good. On the weekly is also looking extremely strong on this stock right now. We almost came close to losing the weeklies all the way down here, but Palantir, a heck of a recovery. This has to be one of the best recoveries of all stocks over the course of this week, guys. Look at this rally. 40% rally to the upside in one single week. Really echoes that big week we had in the month of February of about 43% as well. So no red flags on the stock at all. Looking very good. And now that we've broken above a very pivotal level, this now becomes our most contested area. So we have to move our ranges up. I previously wanted to play it 26 to 25. That has now been moved up to about the $29, $28 range. But we're going to keep some tight stops here, guys, right? Obviously, if we come back down here in the $28 range, we can't get too greedy with it because we know we have economic uncertainty, a recession narrative. So that's why we keep stops relatively tight. If we can get in at 28, stops go pretty much below 26 at that point, and then we will be targeting to the upside. We will be targeting the next level, which is going to be all the way up to about $35 all the way up there. So decent risk to reward even on that breakout, retest, trade, and run. So that's pretty much everything for our technical analysis here, guys. Now we get into some very juicy parts of the video. So number one, we're going to be trying to do right now is go through the list. I have two lists. Well, I have multiple lists on my trading view, but this one specifically is what's known as my options list. Why? Because usually these companies all have weekly options, and usually the volatility is good enough that we can either, if we're writing puts, we can write significantly below the current share price, and they have decent weekly moves as well, right? So we're going to go through the list and tell you guys exactly what I do. So first thing I do every single day in the morning when I open this list right here, guys, is sort by a percentage change to the downside. Then I go through all of these names and determine whether or not some of them are at large areas of weekly support and see if I can get some premium at the lower levels of those support ranges, right? We do these on the top 5 options videos every single week, but I just wanted to show you guys exactly how I run through a bunch of names extremely quickly, right? I put everything on the weekly time frames, and if it's not clear, I skip to the next one, right? I'll take you guys through the list, so feel free to pause the video if you want to be able to copy this list into potentially your own watch list. As I said, guys, this is the options list. It's the one that I use because all of these companies pretty much have weekly options and usually have a decent amount of volatility. So we can either write options and play strategies like that, or even for buying options for momentum continuation in the short term. So here is the list. Feel free to pause and copy if you like. I'll go through this quickly. There's a lot of them, guys, so we're almost there. And as I said, the first thing I'm looking for, guys, is sort by percentage change and looking for outsized moves to the downside, potentially coupled with either 1 or 4 hour oversold conditions for a short move or daily oversold conditions for maybe a longer term swing trade move of about maybe 1 to 2 weeks type of thing. So first one, we're going to go through these in order, right? So Apple, obviously, guys, weekly time frame retest of the support range right here, 200, which is why I was saying if we can get a retest of 200, guys, this is where I'm interested in writing some short puts. Up here, we're pretty much in no man's land, right? There's not much weekly support up here. So this one, I would see it and I would just go to the next one, right? Next one, AbbVie. Well, AbbVie, I was talking a lot about it back here. This is where we were playing short puts on it. Up here, it's a little bit in no man's land. Yes, we have a little bit of a breakout, retest trade, and potential run, but at the all-time highs, guys, it's not my preferred setup. A true breakout and retest trade is this one right here. Weekly downtrend, then we break out of the weekly downtrend, retest this big area of support, and then run. This is the retest trade in which I'm interested in. This one at the all-time highs is a little bit dicey. So this one, I would look at it and probably just move on. Not strong enough, even though there is a little one right there. Moving on down, Airbnb, big level of weekly support down here in the lower levels, 110 all the way down to roughly 100. This one, since we're fairly close to it, I will be looking at some short puts, possibly for next week, 110 and below. This one would respect my criteria, right? Very quick analysis on everything. Adobe has a high share price, so I wouldn't necessarily be looking for short puts. If anything, I'd be looking for either put credit spreads down here or maybe some call debit spreads, right? Either or are still bullish strategies. So Adobe right now, well, we are in a relatively decent area of support, but you guys can see the really big one was all the way down here, right? Big prior level of support down there. I mean, I guess you can argue that there is one right here. As a matter of fact, right now, the higher end of this range right there, which is what we're kind of pulling into right now. This one would actually be a decent one at a second look, right? So we're going to change this real quick. Change this into green. So moving on down. So this is how I would look at Adobe, guys. Yes, we are in a relative area of support, but we know tech has relatively been unfavorable right now. So this one I'm really kind of mixed, right? Even when we look at it on the monthly isn't too clear. So I'd be really waiting for this one in terms of to see if we can maybe test the lower bound of this 500 to 490. And I may make some attempts down there, but not my favorite pick. I really like this level down here a lot better for Adobe. Hopefully that makes sense. Another one is going to be Autodesk. So Autodesk should be fairly clear just by looking at it on the chart, right? There's two clear levels. One is the lower bound and one is the higher bound of this range area. So now that we're below the higher bound of this range area, well, we have to be targeting a bit lower, right? So Autodesk right now would not be on my list of trades. We would really have to come down here, lower to about 205, 200 for me to really get interested right now. Here you can argue that it's a breakout retest of the range, right? But the first one is always the best one when they do that, right? I know they're trying to make a second attempt at it right now, but I myself would favor on this one, the lower end, right? Going to stay very conservative, especially in an environment with, interest rate uncertainty, economic uncertainty, and stuff like that. So Autodesk looks good, but I need to be a bit more greedy and come to the one down here. Moving on down, Affirm, I'm not really going to touch this one at all, guys, just because, very uncertain consumer environment right now. We'll just skip over it. AMD, same concept, right? AMD, you guys can clearly see the large support area below us right now. That is pretty much 117 down to 108. This is where I'd be looking for some short puts, in my humble opinion. Short puts, guys, anything that's pretty much, I like anything that's under $300 because that's under $30,000 of capital exposure per short put. Anything above $300, that's when I usually go with either put credit spreads or call debit spreads if we're in a decent level with some maybe daily oversold conditions as well. That's when I'm looking for that trade more specifically, right? Moving on down to Amazon. So Amazon right now, a little bit in no man's land, right? Amazon, that's why very tough for me to be writing some short puts here. I mean, you can argue that we're trying to recapture this support level, but we're not really quite into it just yet, right? So I would be basing myself off of last Friday's lows. Have to come down at least maybe to the mid 150s for me to get interested. 155, 150, that's where I'd be more interested on Amazon. Right now, it's kind of a tale of in between, right? Really in between this higher level right here and the lower level right there. So here, very tough for me to take a position on it. Now, moving on down, something like ARM, right? ARM, well, we know the valuation is very high from their earnings, and taking a look at the support levels right here, you would have to go with the lower one. Right here, we're kind of in no man's land as well, right? Trying to recapture this level, but we haven't really recaptured it yet, right? So we'd have to go with the lower one. That's pretty much all the way down, 93 to about $80. It's not there, so I just skip over it, guys. Not there, not respecting it, we just skip over. The goal is to go through these as quickly as possible. Keep in mind, when you're doing this, you'll be sorting them by ones that are red, because you want to go with the ones that are already down, possibly closer to the expected move, and go even lower, right? So hopefully this makes sense as a whole. Gonna do a couple more here, and then we'll move on to a different strategy, right? So moving on, AVGO. AVGO, this was a very nice one here, guys. Big weekly level of support. We pulled into it this week quite hard, as a matter of fact, and you can even argue that, yes, there's one right here, but in all reality, it's this whole area. So when you see this big move down, right, you can move. There's actually two levels right here. There's the level of support, which is resistance above the market, which ties into this price action up here. But there's the one below. That's all the support levels from prior to January. So if you see a big move like this on a Monday session, you can look into it, right? Start open there on Monday. You can look at the lower end of this previous support range right down here, 120, 125, and that's where I'd be looking to do some short puts. That's exactly what I did on TSM and NVIDIA, mind you, for this past week, right? So if it's down on the Monday session and I see some opportunities down here, I'm probably going to go for AVGO. Nice uptrend, gorgeous company, right? American Express. So American Express is kind of one that's also in kind of no man's land, right? So you can see that, yes, we do have some support that's been established since the month of April right here. But in all reality, you're looking at a very extended monthly move, right? So this is why I have my, I have my reservations with writing American Express puts all the way up here. Now, if we were to see a multi-week or maybe multi-month retracement on American Express, the likes of which we've seen on stocks like Visa, right? Multi-month retracement, those are the ones that I'm looking for. This one still, even though it does have short-term temporary support, guys, we're still very relatively close to the all-time highs. So this one, I would kind of put it on the sidelines. It's just not well enough established for me. And even when we look at this monthly here, guys, very extended for the most part, right? So beautiful company. If you have long-term shares, yes, but swing trading, tough, right? If you come down here, not too sure that I'd be willing to, play some short puts on it, but maybe some put credit spreads because they require less capital, or maybe some call debit spreads, right? For a quick recovery from this area, maybe a quick bounce. Call debit spreads, those would be the strategies. But short puts, very tough, guys, because if we write short puts down here, 223, that's $23,000 in buying power. And if we get trapped, it is definitely going to hurt, right? So this is how I make my stock selection, determining whether or not I want to write short puts, call credit spreads, call debit spreads, right? There's a lot of factors in play, but hopefully as I go through more and more of these, you guys will get the gist of these things, right? Options is more of an art strategy than it is a defined theoretical strategy, right? It really depends person to person, but these are the way that I play mine. So moving on down, let's move on to BABA. We're going to do probably just a few more of these guys, and then we're going to move on to the long-term investment category, right? So moving on to BABA, you like those crooked lines down there? So moving on to BABA, right? You can see that BABA has a very decent area of support in these lower ranges right here, right? So I moved this box a little bit when BABA breached above the $80 range, but in all reality, we're working above this previous big range right here. It's very messy, but there's really two ranges at play right now. There's the lower range, which is all the way down here, and then there's the breakout range that we've been trying to break out for the longest time on BABA. I'm trying to see if you can see it best on the weekly right here. Prior support right there, big resistance for the markets, trying to act it as support, but we did dip a little bit lower, right? So BABA, I would be tempted here, guys, to make some attempts possibly down here in the lower mid $70 range, right? Because we did see a big resistance for the stock for a long time. Now it's been acting as decent support for that foreseeable past time since the month of June as well. So if we come down into this range on BABA, guys, that could be a nice location to be playing some short puts. That's where I would play them. If not, we have to wait a bit more for more breakout and then retest, and then maybe I play it down here because the drawdown, in my opinion, is only all the way down here. So that's how I'd be playing BABA specifically. Bank of America. So Bank of America has come down quite significantly here from its most recent rally of the 52-week highs, and now we're kind of in a tale of two scenarios, right? So overhead resistance, so we can't really be writing puts, short puts here, but we do have a very nice area of support down there, right? Big previous resistance, current support, and current support that bounced off of it on Monday. So if you look at this one on the weekly, you will see exactly what I mean, right? So this area, very juicy. If for whatever reason Bank of America retests this bottom end of the range, so let's say we continue declining into this range, 35 to 34 would be the area that I'm looking to play it on in terms of short puts, right? Now, it's in a little bit of no man's land, right? So you really need to get that retest to get a better level to be basing ourselves off of. So if I would see Bank of America right here, I would just not be playing it at all because it's not close to my support range. Now, moving on down, let's see if we can cover some nice, another good ones, right? So a Berkshire, we literally took this trade when it was here and we played it on the channel, right? Beautiful range of accumulation. So coming down to this range right here, $400 stock. So this would be one where I play some put credit spreads or at the lower end of the range, or some call debit spreads for some potentially expansionary moves to the upside. And that's exactly the one that I used. I used call debit spreads. Why? Because on a $400 stock, guys, straight call options are going to be expensive unless you go a ridiculous amount out of the money, but it's Berkshire. Yes, it can move, but it's not Tesla, it's not NVIDIA, right? So if I want to do calls that are very cheap on a stock that's expensive, I will do call debit spreads. This would be a perfect candidate for that because we can't really write short puts. It costs $40,000 in exposure, and straight call options are too expensive as well, right? So hopefully that's pretty much educational for you guys in terms of what I look for when I'm looking to do options plays and how I select between different options plays. If it's a stock below, let's call it about $300, I'll look for maybe short puts. If it's above $400, then I always usually either do put credit spreads or call debit spreads, which are also very bullish strategies for those stocks, right? So hopefully that makes sense, guys. That's pretty much the entire rundown of what we were willing to do. Now, number two, a lot of people have been asking for this, and this is where my second list comes in, right? Everybody's asking me, how do you build a long-term portfolio? Which companies do you choose to put in the portfolio? Because a lot of great companies are continuously at all-time highs. Companies like Microsoft, right? And I know people don't like adding at the all-time highs, but that's because they don't really have a good sense of fundamentals. So I will tell you guys how I choose my companies for long-term gains, to build a long-term portfolio. What I look for is very high of these two metrics right here: return on capital employed and return on invested capitals. These are measures of how efficiently a company uses its money to drive returns, not only for itself, but also for you, the shareholder. Return on capital employed, that's pretty much the return that they generate on their net debt and their net equity as well. Obviously, there is a cost to that debt and that equity that the company will raise. Are they able to use the money that they raise from the debt market or from issuing shares? Can they use that money efficiently enough to generate outsized returns? And return on invested capital is almost the same, not quite though. It's a measure of cash efficiency within the company in terms of the cash that the company generates on a quarterly basis, right? How much of that cash can be used to pay out dividends or do share buybacks? These are both different measures of efficiency. However, the reason I use these guys and high free cash flow as well is because return on capital employed, especially, and return on invested capital too, they are known to be the value investors' holy grails for finding exactly that, holy grails, right? You want to be, because these, if we can find ROCE or ROIC above 10 to 15% per year, looking back on a 5 to 10 year basis, guys, usually these metrics are the highest correlation with compound annual growth rate of a stock's share price. Warren Buffett, Charlie Munger, Terry Smith, just to name a few very solid investors, right? They use these as their bread and butter. It's very highly correlated. If you have return on capital employed of 10 to 15%, guys, on a long sample size basis, 10 to 20 years, right? Usually your stock's compound annual growth rate, how much does the stock price increase per year? Usually it will be almost in line with your return on capital employed. If a company can manifest return on capital employed of 20% per year for 15, 20 years, their stock price usually goes up 15, 20% per year. Why do we look over 10%, more preferably 15 to 20%? Because that beats the S&P 500. So if you're looking for long-term invest in companies that beat the S&P 500, these are the metrics we need to look at. So I don't want to give you guys a full breakdown on value investing and corporate finance. You know, a lot of people are interested in it, but it's not the topic of today's video. What I want you to notice, all these companies that have high metrics such as these, right? High return on capital employed and high return on invested capital, you will notice that all of their charts look almost identical for that specific reason. Very highly profitable companies, very highly efficient companies. Let's jump into just a few. Apple, notice the chart, right? So when I look at these companies, what I'm looking for in terms of filters, not only do I filter through this, if you guys want to see my full list so you guys don't have to build it on your own, because I have another, paid for service in which I can use these filters. I'll scroll through the list right now, go through pause the video and write these down, build your own list, right? I'll go through these quite quickly. All right, so that's a bit of it. Moving on down further. Moving on down further. And then moving down further. And then just lastly, a couple, right? So just take those companies, copy them if you wish, guys. There's only literally 30, 40 companies in the entire stock market that have these qualities in them. And you will notice a lot of very famous names in these lists for that reason. So what I'm looking for, guys, is monthly charts. We know these companies have solid fundamentals. What we are looking for are retests. Since most of these companies are perpetually in monthly uptrends, we are looking for retests of prior levels of resistance, which now becomes support, right? Looking to maintain the uptrend. We're looking for all the retests. Apple, retest of the 200 was a decent buying opportunity. These are the companies when you see me bring up Vici, Mercado Libre, SPGI, Costco, things of that nature. Shares, swing trading in shares, right? What we're looking for, maybe longer duration swing trades, 3, 4, 5 weeks, a month, 2 months, or even long-term portfolio ads, right? These are the style of companies I'm looking for. We're gonna skip over Airbnb because although it does respect the criteria, it's a relatively new company. We don't have that much data, right? So it's a bit of an anomaly, but I like it. So moving on down, ADP, automatic data processing. You will notice that all of these charts look the exact same. They are absolute performance machines and they outperform the S&P 500 almost every year. And when they don't outperform in 1 year, guys, the compound annual growth rate does outperform the SPY. So ADP, same concept, monthly uptrend, looking for a retest of this location right here. If we come back, this is where I'm be looking for a little bit of a swing trade, right? It is almost ready. ANET, Arista Networks, same thing, right? A bit of a newer company, but does respect our minimums right here, right? Retest of this range right here, decent location to be looking for some swing trades in some shares for some continued appreciation. You look at all the profit, guys, every single one of these companies, I don't have to go through them, but you'll notice a trend. Very highly profitable companies. And when you pull up their EPS expansion and the revenue curves, they all look the same. Consistent, profitable, high quality companies. AOS, producer manufacturing, they're in building products, right? They all have the same charts. And if you think they don't, you can even go back even prior in the 1980s, right? You notice the consistency of these companies. They really just do a good job of going up over time. This one got a lot more solid after the recession in 2009 because of a few industry reforms, but looking very good. This one as well. Monthly back test of the $70 range, right? Back test could be a decent opportunity for a swing trade on this stock. Moving on down the list, right? The reason they have such high EPS and high profitability, guys. Well, not only do they run very solid businesses, but a lot of these companies do a tremendous amount of buybacks. And if they don't do buybacks, they pay very good dividends. AutoZone, right? Easy company. You might say, well, they only sell car parts. Yes, but they buy back a tremendous amount of shares, guys. Take a look at this EPS, right? EPS, crazy EPS expansion, nice revenue expansion. They all look the same and they're all highly profitable companies, right? So AutoZone, this back test right here, great swing trade for the month of May, decent profits ever since, right? So we're going to be looking for a potential revisit of this location. They can stay range bound for a decent amount of time, but you see the parallels, right? Prior resistance, newfound support, and then they usually consolidate for a bit and explode. Booking.com, same concept too, right? New resumption of the monthly uptrend after struggling a little bit during the COVID period and a bit before, right? Consolidation. If it wasn't for COVID, probably would have just continued expanding. Buyback machine, highly profitable company, high EPS growth as well. Decent entry right now. Back test of a prior range of resistance. Back testing it now, 3,300 down to about 3,150. Decent area to be picking up some shares of Booking.com. Cardinal Health. This one, healthcare company, a little bit more inconsistent, so I'll kind of skip over it. It is a good company, but there's better quality companies in healthcare, such as UNH. So I may as well just delete this one because I have a few better ones in the list. So I never really trade that one anyways. Colgate-Palmolive, right, can stay range bound for quite some time. But what you need to do is derive your levels, right? Derive the levels on the charts, guys. And if you see, if I go through these lists once a week, because they don't move that much, right? I look for monthly levels. So we're not looking for day-to-day basis, right? We're looking for big monthly levels. When you see big monthly levels get retested, right? They broke, right? Come out of this, break out of the highs right here, break out, and then slow retest of this whole region of highs into the lower range as well, right? Retests, great opportunity to be building a little bit of position, and then you see the rest is history for Colgate-Palmolive. Costco was one of my plays, guys, from, I think I started the channel, literally, when I started the channel in April and May, that was one of the first plays I publicly gave on the channel, guys. Consolidation range right here, boom, expansion. This was pretty much, at that point, almost 2 years of consolidation, and every single time it would tap these lows right here, right? Where are these lows being formed? Well, glad you asked, guys. They're pretty much right above your previous resistance, tagging into new support, tagging nicely, and build up a position here, and then the rest is history for Costco. Look at these long-term charts, guys. They all look the same. Every single one of these charts look the same, because we're looking for the highest quality companies in the business. CP, I've recommended this one for a long time on the channel, guys. Pretty much the past year I've been talking about it. It's pulling a Costco, range-bound accumulation, guys, for the past 3 years at this point. What do you think is going to happen? Are they going to break down and do something like this? Or are they just going to continue their trajectory as they always do, right? Well, now the company is extremely solid, and they should be having a good little breakout area. So if we start retesting this level again, guys, mid 70s, lower 70s, I continuously buy shares of Canadian Pacific. Deck, this is a bit of newer one as well. It's an apparel brand, guys, for the most part. It makes the list just because it does respect the minimums, but this one has really blown up as a byproduct of Nike's fall off, right? So these are the guys that own Hoka brands of shoes. They also own Uggs for wintertime boots that women seem to absolutely love, right? This one, I'll skip over it for now. I'm not quite convinced that it has long-term staying power, but it does respect our minimums, which is why I keep it in the list, just on the back burner, right? Now, moving on down, Domino's Pizza. Domino's Pizza. Do you guys see anything wrong with this chart over the last 15 years? Have they struggled a bit recently with supply chain issues, and pricing issues after our great inflation? Yes, but now it's back to business as usual. After earnings, I was saying this one was a great buy. Monthly uptrend, retesting the lower end of that range right there. 420 all the way down to 387. Great ad, guys, for some swing trade shares. And you can see long-term fundamentals of the company are doing just fine. Profitable company, continuously expanding EPS, continuously expanding revenue. We have to take these deals when they come. I'm looking for anomalies. Usually these companies are always on an upswing. When you can find them on a big monthly downswing, that is when we need to strike. Moving on down, Fastenal, right? So Fastenal company right here as well. Very solid compound grower right there. Same concept applies, right? Moving up, monthly uptrend, hit our area that we were looking for, the back test of prior resistance, newfound support, and look what happened here, guys, right? Starting to expand on that trend as well. So if we get a little bit of a retest down here into the lower $60 range, could be a decent entry for such a solid company. FICO. Look at this one, guys. FICO, right? Fair Isaac Corporation, the one that gives out all the credit scores. Extremely solid company. When we get some back tests here, guys, we have to take them, right? 2021, 2022, when they back tested this entire location right here, it's skewed because the chart is so crazy right now, but you can see exactly what I'm talking about, right? Breaking out, when you find them on these dips, guys, we have to be taking these opportunities, have to be taking these companies. There's absolutely no excuse to not be buying these companies when they have outperforming market fundamentals, right? And now it is pretty much gone, absolutely gone. All we can get is a retest on the monthly sometimes, right? And then we barely retest the previous highs. This one just does not provide any entries whatsoever. Monthly overbought, tough for me to chase up here, right? Moving on down, Fortinet. The reason that Fortinet's the only cybersecurity company that I always talk about, guys, I never talk about CrowdStrike, I never talk about other ones, but I always talk about Fortinet, giving you weekly put wheel plays. Why? Because of our fundamentals, guys. Such a solid company, and anytime we see monthly back tests into huge areas of support, we have to take these plays. It happens every single time, right? Back test of the previous highs, run, right? So they do consolidate sometimes for a long time. We have to pick that consolidation, guys, and be sure that we have one of the highest quality companies in the game. All of your most big tech names are in there too. Google is in this list as well. So when you see monthly back tests of a range, please, 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 please don't be shy, right? Other companies as well. WW Granger, another extremely solid compounding growth machine. Look at this stock, guys. They all look the same for a specific reason. They outperform the markets because they use capital extremely efficiently, guys, right? So what we always do on the monthly timeframes, guys, we're always looking for potential back tests of previous ranges. If we back test this location right here, no problem adding some shares, even if you're less familiar with the company. Home Depot, same concept, guys, exact same concept. When we see some back tests of prior ranges of resistance, we have to be taking these plays, guys. Consumer weakness or not, this company traditionally does outperform extremely, extremely well. Hilton, the reason I always recommend Hilton as well, exact same concept here, guys. When we test some most recent monthly lows, 12 EMAs, we have to be making a little bit of an attempt, guys. These are some of the most solid quality companies in the entire world right now. Moving on down, HPQ actually makes the cut, but is not one of my favorite ones, so I'll skip over this one. I don't really like this one unless we get a test of this range. I usually have it marked on the chart. I apologize that it's not there. If we get a big retest of the 2000s and 2008, 2010 highs down here, like we had a few times over the most recent past, right? Most recently in the month of May, June, that was a great opportunity for HPQ. Intuit, a company that I talk about a lot on the channel, guys, right? Same concept. This is now, at this point, a monthly cup and handle recovery trying for the breakout. Do you think it's going to do it, guys? Probably, right? Which is why I've been talking about it so much over the last 2 weeks. Intuit looking very strong. I brought it up again when we were at this level in May and June, saying it was a great buying opportunity. The rest is history. Well, now you have it again, doing one of the most bullish setups in the entire technical analysis repertoire, right? Extremely, extremely strong. And the list goes on. You can see Louis Vuitton is in this list as well. Have it right here. I've been saying 141 down to about 120, guys. Don't fade this one. And still people continuously fade it. So you guys are free to do what you want. MasterCard, same reason in there. Meta is in there as well. Same reason. If you back test some levels like this, guys, when we back test these levels, right? Can we please be buying these dips, right? I'm not going to say it too many times, right? Altria, MO, tobacco company. A lot of people say, yeah, but Will, I don't like investing in tobacco companies. Well, you can do what you like with your money. No problem there, guys. But it's just a matter of fact, when we retest large areas of monthly support, you usually get some share appreciation, right? Huge level for MO. We found a bottom and now probably going to be going back up for the foreseeable future. Meta is we just went over Meta. Mercado Libre makes the cut as well. I was talking to you guys about this one, right? Monthly uptrend. Now cup and handle pattern, back test and run. I was talking to you guys about the back test in this location for about 2 months at that point. Hopefully you guys are in this one with me as well. You know, Microsoft obviously makes the cut as well. Monthly locations, back testing these locations right here. We have to take these trades here, guys. Have to take these trades, and the list just goes on. All of these companies look the same, right? If you don't believe me, we'll go through the monthly charts of all of them, right? MTD, NTAP, NVIDIA is relatively new on the list. NVR, super solid company. Don't get shy at the share price. You can always buy fractional shares, right? ORLY, another O'Reilly Automotive, guys. Tremendous buybacks. This company is so solid, guys. So solid. Otis, elevators, right? Otis, very, very strong company in the trade location right now. So do with that what you will. Palo Alto Networks also makes the cut for this list too. Paycom also makes the cut for this list as well, even though they have been coming down significantly, guys, right? Decent little buying opportunity down here in the mid 140 range. Paychecks as well. Paychecks, very glorious buying opportunity in this lower level. Consolidation for 2-3 years. Usually these do break bullish in a significant fashion. Starbucks surprisingly makes the list as well. Decent range of accumulation, long-term recovery story for Starbucks. However, SPGI makes the list. Was talking to you guys about this one back in the month of June. Hopefully you guys are able to buy the dip on that one. TJX Brands, one of the only retailers that actually makes the cut here. Unilever also makes this cut. Look at the long-term charts, guys. UNH makes the cut. Visa, long-term charts, right? Vici is in there as well. VeriSign, one of the companies that Warren Buffett owns, huge range of accumulation for the past 4 or 5 years. What do you guys think is going to happen? I can probably tell you. And Waste Management, another one. Waste Management, extremely solid company. We're talking a lot about it for the breakout back here. Testing it at the lows back here. Last October, we talked about this one. We did their earnings. And again, when they were about to complete the breakout on the monthly, and the rest is pretty much history. And Yum Brands, also one that respects it. So hopefully with all that, guys, you now understand the importance of having high return on capital employed and high return on invested capital. All these companies, as a byproduct of their efficiency, bring in extremely high free cash flow. And what do they do with that free cash flow and that efficiency? Buybacks and dividends, right? That's what we're looking for here, guys. Continuous buybacks and continuous dividends, extremely high compounding stocks that usually outperform the S&P 500, right? So hopefully that's pretty much it for today's video, guys. Hopefully that was educational for you. If it was, consider dropping a like on the video. Would appreciate it for the growth of the channel. Second, if you're new here, consider subscribing as well. Would love to see you back. And lastly, guys, if you have any questions whatsoever, please feel free to leave them down below in the comments. Anything you want, stocks, technical analysis, options play, macro discussion about the recession, anything you want, leave it down below and I'll get back to you in the next 24 hours. We'll do a full portfolio recap on the Monday session. Very decent week of trading for me. Nonetheless, we're not really running much plays into next week at all, pretty much sitting in full buying power, except for just a few that we remain under assignment for. And I'll give you guys pretty much a full recap on the Monday session since the video right now is already quite a bit long, right? So hopefully you guys had a great week. I did pretty much. So that's everything. Take care. See you over the course of the weekend. We'll be dropping a video tomorrow, most likely a subscriber request video, and then the top 5 options plays on the Sunday. And quick little hint, the Discord is coming out over the course of the weekend as well. Been working very, very hard on it for the last couple of weeks. So everything is pretty much going to be set in motion by the end of Sunday night, and I will present it to you guys officially at the start of next week for popular request. Thank you guys so much for your interest in doing that. And pretty much almost done. So take care. Love you guys. See you guys over the course of the weekend, and peace.